Hello, this is the top 10 investment indicator. Today we will talk about several major indicators about the current situation, the Goldman Sachs and the Morgan Stanley opinion, and also about the federal government data. So basically, we will also talk about the three stock we recommended several weeks ago. Actually, it's about one week ago. So let's start it. First, this chart is the current inflation data. Basically, is that all the major economy, United States, UK, and the European Union, all have very similar, very high inflation, over 8%. In the United States, about 8.5%. So that's pretty high. This is almost for the United States. This is the inflation similar to in 1980, like 40 years ago. So this is very, looks very bad. And let's think about the Goldman Sachs opinion.
Recession in our baseline forecast. We do have significantly below trend growth. 0.9% is only half the long-term trend pace. But our best guess is that we'll be below trend. That rebalances the imbalance in the labor market, and that ultimately also helps bring inflation back down. That said, there's a very significant risk of recession. I think it has gone up because it's very difficult to reduce labor demand without the deterioration feeding on itself and then ultimately culminating in a recession. So we're giving a 1 in 3 chance of a recession in the next 12 months, and it's close to 50-50, I think, over the next.
But you got 2% of unemployment.
His opinion is that he is the chief Goldman Sachs economist. His opinion is that there is only 30% recession within a year, and it's like a 50% recession within 2 years. But the Morgan Stanley is much more bearish.
To get to that base case that you have of 3,000.
Yeah, first, that's not our base case; it's our bear case. Our bear case assumes a recession. We're still not quite there yet. And what it really accounts for is a mild recession. It does not account for, a financial crisis or some sort of big accident on the back end of this, because that's not really how we're set up. Meaning, the banking system is very secure. There is a lot of capital still out there, even in corporates. Right, the consumer balance sheet is actually in decent shape. So it'll be a mild recession if we get one, and we think the odds are increasing for sure into later this year, next year. And so, we can get through that. And the 3,000 target really does not assume a deep cut. We're assuming about $195, $200 in earnings for next year. That's what a mild recession would bring. And then you take a multiple of about 15 times on that. And that's how you get to those numbers.
No, fair point. And I'm sorry about the bear case.
So basically, what happened is that Morgan Stanley think that there could be another 15% stock market drop. And his opinion is that there is quite possible we will have a recession, and the 15 times ratio to the valuation is fair. That gave about 3,000, like a S&P 500. So now we have a big inflation. We have the two firms have a very different opinion, and in fact, most of the investment in Wall Street, like in JP Morgan, BlackRock, they're very bearish. Especially they're very bearish, like within the last 10 day also. But because all of the investment banker are very bearish 10 days ago, that's why about 1 week ago, I recommended to buy in 3 stocks, which is Novavax, another one is Square, another one is called Coinbase. Now they have increased about 20%. Now this is 50. Square also increased about 20%. So the question here is that Coinbase also increased about 20%. So all of the recommendation has since increased 20%. So the key here is that whether we should sell or whether we can wait. For that question, we need to discuss a little bit more. Let's see the 10-year versus 2-year treasury maturity, the yield. The 10-year treasury, minus 2-year treasury, if this one drop to negative or close to negative, in the last 40-year, United States always get into a recession. So this is a leading indicator. Usually it's about a year or so ahead of the recession. So we can see that right now it hasn't dipped below 0, but in my opinion, in my humble opinion, this will dip below 0. So we will discuss more next time, but I'm pretty confident that this will dip below 0. So that come back to the stock. I recommended 3 stocks. I suggest you should sell most of the holding you bought for these 3 stocks: Novavax, Square, Coinbase. I suggest you should sell about 50% of what you bought, knock in some profit, 20% profit, and then maybe this one will go another 10% or 20%, but that risk keep going up when the stock are going up. So that's what I told you. Sell 50% just to be safe, because the stock market may bounce another 5%. These 3 stocks will bounce more than general market, so it may bounce 10 to 15%. But I still think we should sell. I will also put the link on my last video of recommended these 3. Actually, it was in another channel. So this is, I try to separate the green wall versus investment. All right, that's the big picture and the 3 stock recommendation for keep your glass half full. That's all right. Thanks for watching, and if you like my video, please subscribe.